Hello, welcome to the Economy Forum. I'm Rob Lyons. I'm the convener of the forum, and I'll be chairing tonight's discussion. This is the third in our series of looking at specific areas of the world economy and the impact that the COVID-19 epidemic has had on them. This week we're looking at the US, the biggest economy in the world, and whose health has such a big impact on the world economy. After essentially reacting to the epidemic as the Chinese virus, President Trump has now engaged with Congress on unprecedented levels of intervention by the US government into the economy. Over the past few weeks, we've seen astonishing rises in US unemployment. So this evening is a chance to find out what exactly has happened in the US economy and what our prospects are for getting out of a depression once the lockdown finishes. So we'll be looking at these questions and many more, I've no doubt, over the next 90 minutes or so. Now, before I introduce our speaker, a quick word from our sponsors. The Academy of Ideas is continuing to work throughout the crisis. None of our staff have been furloughed. In fact, we're working harder than ever, particularly on running meetings like this every evening. All our online events during the crisis are free and available to anybody with the means to log on. We'd be really grateful if you could consider giving us your financial support. Any donation, large or small, is definitely appreciated. Just go to academyofideas.org.uk/donate if you'd like to give us a bit of cash. Even the price of a pint, a London pint, would be very gratefully received. Right, back to tonight's discussion. Our speaker tonight is James Matthews. He's a management consultant in New York State. He's a commentator on the US economy and business, and a former economic forecaster. I'm sure he'll be wary of making too many forecasts tonight, but I'm very much looking forward to his analysis of the situation in America right now. James will speak for about 20 minutes and then we'll open up the discussion to the virtual floor for your points and questions. Right, Jamie, you're unmuted. Whenever you're ready, fire away.
Great, thanks, Rob. Hey, great to be here. Thanks for inviting me to provide an introduction. I'm really looking forward to the discussion. What I'm going to cover in this introduction, first, just look at the economic situation, the immediate impact we've seen of the recession. Secondly, look at government responses and some questions around their effectiveness. And third, the prospects for the near future for recovery. And I will say right to begin, I'm going to be looking at primarily at the domestic economy. So in the discussion, you want to ask and talk about the broader global economy, that's fine. So let's start with the economic repercussions of the virus and the shutdown policy. I think the headline here is that the situation is pretty dire, more dire than is typically described. Yes, it's uneven. Some industries are doing quite well, high tech in particular, reasonably well. But the pain is being felt across many companies, many industries, and employees are being impacted negatively. Rob mentioned the unemployment. That's probably the most stunning thing we've seen. It's now, most recent month, April went up to nearly 15%. That's the highest since modern records in 1948, and it's reckoned to be the highest since the Great Depression, which reached 25%. The thing is that probably understates it considerably. First of all, you've got a number of discouraged workers who've been assessed to drop out of the workforce. If you included them, there's a broader measure. The unemployment would be at 23%. The figure also ignores those that have been pushed into part-time work. They're still being counted as employed. There's an estimate that there's like another 11 million who have been pushed into part-time work. And I think what struck me and some others was just how widespread. I mean, I think everyone anticipated that retail, hospitality, restaurants, things like that would have been impacted badly. But it was seen across all industries, and also pretty much you could see it across levels of employee as well. A fair number of mid-level, higher level jobs being taken out. There were a lot of reports about this being temporary, But we've also just seen, especially in the last week or so, a number of companies that originally said that employees would be furloughed are now being permanently laid off or being made redundant. And we've also seen some companies, General Electric, Raytheon, announce actual layoffs, not furloughs, and that was a bit of a surprise. General Electric's cutting 25% of its workforce in its jet engine business. And I happen to know just through my own work that a lot of companies that are now considered healthy that are in the midst of planning for more furloughs and layoffs in the near future. So beyond unemployment and the job picture, I mean, the rest of the situation doesn't look great either. I mean, GDP growth dropped nearly 5% in the first quarter, which is quite something when you think about the fact that there was only 2 weeks of a shutdown in that first quarter. The estimates for the second quarter are pretty bad. I mean, they tend to range from a 25 to 50% decline annually. The Congressional Budget Office forecasts 40%, and the latest estimates for the year also expect a decline for the year, and we'll talk about that a little bit in a while. We're seeing capital investment is dropping dramatically. The bankruptcies are starting to come through, hitting small businesses in particular. There's a study came out which said that I think it was half of small businesses said they've got 6 months to go, or if they can't get going in 6 months, they'll be closed permanently. Consumer prices have started to drop. According to one measure, the sharpest drop since 1957. Of course, when you see deflation like that, that brings back reminders of the Great Depression. What's been the reaction of consumers? We've seen people struggling to pay their mortgages, and it hasn't really been highlighted that much, but because the government did bring in some backup, some protection, but those are only for government-backed mortgages, and actually a very sizable percentage of the market is not government-backed. I watched The Big Short again the other night, and I was unpleasantly surprised to see that so many of the things that they talked about in the mortgage market are still around with us and haven't been rectified. And one of that is the fact that you've got with these so-called non-banks making home loans that they then sell off to other investors. And we could see a foreclosure crisis. What we're also seeing from consumers is that they've slashed their spending, they're hoarding cash, and they're even shrinking their credit card debt. You know, that was, I thought, a bit of a surprise. But actually, there's clear they're hunkering down and trying to get their financial houses in order. The only high-level indicator that has been positive has been the stock market, which has been up year on year. And it went down yesterday, but before then it was up, and really has been disconnected from economic reality. It's certainly been bolstered by the Federal Reserve and government's actions. But we can also talk a little bit more about that and what might be driving that. So that's kind of where things, stand as my high-level overview. So I thought maybe now we could look at the government responses and some of the implications. I think the headline here is that the government has acted aggressively and fairly quickly, and as Rob said, with a lot of money. There's incredible amounts of money being pumped in. I think the question is, how effective is this in the face of what's emerging to be an economic collapse? And is it being targeted in the right way? So first, let's talk about the Federal Reserve, the central bank, like the Bank of England. So the Federal Reserve cut its target interest rate to just above zero. So, really bringing that down, and announced a large, what they call quantitative easing program, similar to the one introduced in the financial crisis in 2007, 2008. And in particular, the Fed has announced a program to buy, up to $1 trillion in corporate credit, including corporate bonds, really to support companies in a direct way through this credit. And what we've seen as a result of this is that more credit being extended to companies to help them through, but it comes at a time when companies were already loaded up with a lot of high levels of debt. And I think we could ask a few questions about this. First, you wonder if this is, in a way, too much, if it's overkill. You could make a case that central banks should be supporting credit markets generally, that they don't just, shut down. But, you could also question, though, whether it's something else to sort of intervene and buy up bonds of, for specific companies. When they do that, just because companies have to pay more for their, to borrow, it's really distorting what should be a market signal, right? Investors are assessing companies and they're demanding a higher rate on the riskier companies. And that's what we've seen. I mean, when this first happened, companies went to the bond market, and that they were finding that it was harder to borrow at, more costly, but the market was differentiating. It was basically saying certain companies are more distressed than others, and it's going to cost you more. But now that the Fed has stepped in, it's driven down the yields and helped out there. I think as well, what you're seeing is that this is will prevent, at least in the short term, bankruptcies, especially of the largest companies. And we could question whether really that's the right role for the Fed, whether it should allow the market to play out. It's clear that they're trying to avoid companies going into the bankruptcy courts, but, are they keeping companies that rightly, as some would call zombies, that really should not necessarily survive, and not the most efficient companies. And I think what you can talk about, and what some commentators are talking about, is a distinction between a liquidity crisis and a solvency crisis. And that the Fed's role and what it can do is to help liquidity, but it really ultimately can't solve a problem of solvency of companies being healthy and continuing. It's one thing for them to put a backstop to the banking financial system as they did in 2008, or to generally improve cash flow for healthy companies or facing a short-term cash crunch. But today we have an issue of solvency, companies not being able to generate sufficient revenues from their business to cover expenses, including the debt. And this will become increasingly apparent as the crisis drags on, as it, unlikely to be just a month or two. The Fed seems to recognize this. They've said that they can't lend to insolvent companies. That's what the chairman, Jerome Powell, said. And they've also said it's up to the fiscal, it's now for fiscal, not monetary policy to take over. So, and with that, let's look at fiscal policy. Let's look at the government. So again, like with the Federal Reserve, the central government has intervened heavily, up to about $3 trillion in total in various aid and loans for different large companies, small companies, individuals, unemployment. And there's currently in the House a proposal from the House Democrats for another $3 trillion, mostly in payments to individuals. The Republicans who control the Senate, however, have so far rejected that. There have been problems with inefficiencies in the distribution. a big news story was that some big publicly traded companies were getting in on the small business loans. But I think what you're also finding is that it's that the prerequisite that companies must spend 75% of their money on employees' salaries. For small companies, this really isn't working because they tend to have modest payrolls, and their other costs tend to be higher. So actually right now, even with the second round, a lot of the small companies are not accepting the money. So that's an interesting development. I mean, with all this, what we're finding is that the federal deficit and the overall debt held by the United States is increasing pretty dramatically. The deficit is projected to be 3.7 trillion by September, and that's with no further spending bill. The debt as a percentage of GDP is jumping up from, I think it's 79. It's going up to about 100% in September, predicted to go up about 108, 110% next year, which is significant. I wouldn't say it's a crisis level though. I think it's manageable, but it is definitely significant. And this is, going to flow through and have knock-on effects. Already the state governments are in trouble, and what we're going to see are definitely cuts in spending at both the federal and the state level. This is significant because this spending has been helping economic activity, especially in some locations around the country. And also, it's clear that tax increases will come. There'll be a burden on companies and individuals for some time to come. And also, again, there's a question around, is it too much too soon? When you sort of do this, it means you don't necessarily have the funds later, which they could need later. So finally, let's turn third and last topic to the future prospects. And here my headline would be that I think that there's an underestimation of how deep the decline is and will be, and that there's even though there have been assessments have adjusted, I think they're still too optimistic on the whole. And I think that what's really needed are more dramatic steps, and which would require, though, political will, and there doesn't seem to be that will there. So what do we mean by that? Well, if we let's first talk about some of the forecasts that we see out there. Just to pick one, not for any particular reason other than it was in the newspaper a day or so it's pretty up to date. But Deutsche Bank forecasts GDP to rebound 15% in the third quarter, 6.5% in the fourth quarter. That still leads to an overall decline of 8% for the year. But it does indicate a recovery, and it also projects growth in 2021 and 2022. And you also see, that's been pretty standard. Congressional Budget Office is, most forecasts are predicting an upturn in the second half. And that's been often commented around when the stock market has been up. It's been said, well, we've reached rock bottom now. The thing is, though, is that I think this is too optimistic. I don't think it factors in the unemployment and job losses to come and the knock-on effects that'll have to the economy. I think this is starting to dawn. There was a Wall Street Journal article yesterday which had some interviews with corporate finance executives, and they had a much more pessimistic, or what you might consider realistic assessment, I think, than the market analysts or economists I've read. And certainly been my experience of talking with companies is that they run some different scenarios, but they're planning for things to be much worse than what we see in the forecasts. And let's talk about a V-shaped recovery, I think, is going out the window. Now there's different, it's a U or a Nike swoosh or whatever you want to call it. It's certainly not immediate and abruptly high again. Reopening is happening in the U.S. economy. I think the question is whether it really will boost the economy in a big way. We have 13 states that have largely reopened, 23 that have partially reopened, including New York State recently, and where I am in upstate New York at the Finger Lakes this Friday, we're due to start. Woohoo! But still, even when you do start to open, there are tentative steps, and there's only certain businesses, and even into it's after like certain phases of reopening, there are going to be social distancing measures. I think it's hard for companies to plan around the unevenness of the reopening. I mean, the whole process has been uneven and somewhat arbitrary, even because it's all led by governors and even in some cases counties. You may have heard about Elon Musk, complaining about California, the Bay Area county where his car factory is doubling down on a lockdown. And I think he's right that there's, it really doesn't make sense economically when you think about that other parts of California are open, his competitors in Detroit are opening, and he claims he's going to willing to be arrested or move the company to Texas or something like that. And I think you can't, a lot of people have mentioned this, but you can't just declare to be open and then find that, everything will return to what it was before. People do remain fearful and risk averse. You find that a survey found that 50% of the New York tri-state area, would wait a certain number of months, even if restrictions on businesses were lifted. As I mentioned before, a lot of people are hunkering down on spending. They fear the worst. We hear reports of workers saying that they feel it's too dangerous to go back to work. And I think that in particular, the thing I've just never understood really is why the markets haven't factored in a second wave of the virus coming. It's certainly been talked about. Again, just yesterday with Dr. Fauci talking at the Senate, and it seemed to hit the markets. But the thing is, though, is it's not necessarily that a second wave in itself would be an economic problem in theory, but it's clear that already they're talking about a second shutdown, lockdown, if that starts to emerge. Seems to be no political will to kind of steal the populace, to kind of see through it and keep working through things. And I do find that up to now, the forecasts don't seem to have factored in a significant second wave in lockdown. It's clearly not just, political will is a major issue. It's not the only issue. There's issues, clearly, like, as I mentioned, unemployment. There are things that we haven't seen and could be a problem. The energy industry, we already had low oil prices. They're getting hit. Commercial real estate, hard to see that coming back. Apparently a significant percentage of bank holdings are tied to commercial real estate. And I think a general point is just the longer this has gone on, it digs a bigger hole and it just becomes harder to emerge from. And there's, other obstacles other than, say, a lack of demand from, spending. I think the most, thing that strikes me the most about this is this latest crisis is just the speed at which it's happened, the disruptiveness, the suddenness of this. It's not gradual. It doesn't give companies time to adjust or governments time to adjust. That's what seems to me to be different. And that's what also seems like it would be hardest to potentially overcome, right? When you have supply chains disrupted, it's going to take time to reestablish those. Some suppliers won't be there. It's going to, a lot of companies have complex operations that have been idling. To get them back and going is not necessarily going to be quick. They have to be, especially if they have to be reconfigured for social distancing measures. And even employee relationships, which are arguably more adaptable, are going to be disrupted. I think It's interesting that there's a discussion around, could there be a depression is being dismissed pretty much. Ben Bernanke, for instance, the other day, said no, he's not only the Fed chair during 2007, 2008, but he's also written and books about the Great Depression, seen as an expert on it. He said, well, the expected duration's much less. It's not going to be like this. I would say though, but if you get to depression levels of reduction, and especially since this will last longer than what's expected, that's still significant, isn't it? There's, even if it's not the same. He also said that, we won't see a breakdown in the financial system as you did in the Great Depression. That's true. I do think, though, the banking system will come under strain. It doesn't tend to happen immediately. And also, again, does that really matter? It's still, a big problem. So even if it doesn't meet the technical definition of an extended Great Depression, I think we're seeing something that's depression-like in its impact. So what will we see, just to wind up, and sorry, Rob, I'm going over here, but I think the process will play out in terms of restructuring. I think we will ultimately see the weaker companies going under. I think there'll be a lot of mergers and acquisition. I think companies will take the opportunity to do things they've wanted to for a long time and take out costs, especially middle management. I think companies will rethink businesses. There's been a lot written about this. Will curbside food pickup continue? More use of technology, virtual meetings, AI and robotics, will those finally come into play? I think resiliency is the new buzzword. No longer wanting to be resilient on just-in-time supply chains. Of course, that's going to add to costs. And reshoring core industries like PPE and life sciences, and probably other industries will be defined as strategic. I do think there are limits to how far that can go. There just aren't sources right now that are local, and it's not necessarily the wisest decision to make as well. The big $64,000 question is, will we see anything more transformative in the, which might take, more to the medium term than the immediate? I think certainly it's being talked about infrastructure. That seems doable, but maybe not all that transformative. There doesn't seem to really be any appetite, though, for anything that's a big spending program or anything that's designated to try to transform. Before this, the Green New Deal was one of the things on the table. That's not my ideal, and I'm not advocating for it. There's as much austerity in that as economic boost, but at least it is something that has a larger impact, but that's not really, even the Democrats are not arguing for that. And really, we don't see the political will for any big transformation. Standard Republicans are ideologically opposed to government intervention. The more populist wing that's developing, Marco Rubio, Josh Hawley, they right now are focused more on worker support measures, and so are the Democrats. They just tend to be more about getting money into people's hands, and less about really thinking through the economy. So I think the political class has somewhat got its head in the sand. It wants to just get through this in the short term and hoping it'll go away. That's it, Rob.
Thank you very much. That was very well structured and very comprehensive. That is brilliant. Thank you very much indeed. I'll put you on mute now so you can relax, and I'll open it up to the floor. So if you would like to speak, please use that participants button down the bottom, and then press on raise hand. There's a little box that pops up there at the bottom of that list of participants. So if you want to speak, please raise hands, or if you've got any specific questions you don't really want to speak, you just want to ask a question, you can do that in the chat as well. So I've got Sally Millard who'd like to speak, followed by Dan Salt. So Sally, the floor is yours.
Thank you. That was really...
Sally, you're very quiet. Can you speak up or get close to the microphone?
Thank you very much. That was very insightful, interesting and frightening. I've got a question about your last point on political will. And I think what was interesting to me with the lockdown in Britain and everywhere it's taken place is that the will to lock everything down seemed to be there, and that seemed to happen extremely quickly. And I find it fascinating and worrying that the will to get things back up again doesn't seem to have that. There is no will, therefore everything has to happen really, really slowly. And I know even where I work, the idea that you want to go back to work rather than sit in your study at home is met with disagreement, wide disagreement. No one wants to go back to work. And so, and I think that's probably the same everywhere this lockdown has happened. So I'm just wondering, how is it possible to change that? Because something has been shown that something can be done if there's will to do it. Can we turn that around so that we can have will to go back again?
Okay, thank you very much indeed, Sally. I'll mute you and I'll unmute Dan Salt. Dan.
Yeah, my question was again to do with political will. In light of the extreme partisan nature of US politics, is there going to be broad agreement on the next steps moving forward? The current stimulus or packages to try and float the economy at the moment have even those run into a lot of political wrangling. And when I hear that people like Laffer is advising Trump on what happens next, is there going to be any political will, particularly in an election year, to actually push forward with actual true packages to try and help the people near the bottom or the middle? Thank you.
Brilliant, thank you very much. Right, Para.
Okay, I've got two questions. Could you expand, you kind of threw this comment in saying that resilience is the new buzzword. Perhaps I didn't understand it properly, I didn't get it exactly what you meant by that, but it'd be useful for you to explain, given that resilience is a loaded word on its own terms. Secondly, in Britain, you've got the government giving us guidelines, leading, if you like, in some form or shape. You've got the CBI, you've got the TUC, and companies are kind of responding to what they want what they want them to do. What is the equivalent in America? Because it comes across from the readings. Yes, there's the federal government, there are the states. As you point out, 19 states have opened up, 23 partially opened. Are companies kind of taking open as the guideline and then devising their own rules? Is there any standard response to anything really in terms of what people ought to do? The company I work for, its own equivalent in the US, I know have got its own criteria for when they're going to open up properly. And I'm just curious as to see how is business approaching this?
Great, thank you very much. Now, I've got a couple of questions on the chat and then I'll bring in Helen Searls. Wendy's asking, and I think a lot of people are thinking this, about the magic money tree, about printing money to get out of this crisis. How limited is the room for manoeuvre on that? And Noah's asking, far from creating opposition to the Green New Deal, groups like Extinction Rebellion, could they use the improved environmental outlook during the the crisis to justify their anti-humanist policies after the pandemic ends? So two big questions there. Now, Helen Searls, the floor is yours.
Thanks, Rob. I have a question on Jamie's kind of prediction in terms of the depth of recession, which I think is, I agree with him. But Jamie, you phrased it a little bit around the idea that, you know, there'll be a second wave of the virus and, you know, the impact that that could have. Whereas, you know, I feel, I may be wrong on this, I kind of read it a little bit differently, that seeing as so much of the American economy has been based upon kind of consumer confidence, consumer spending, it's very consumer led in terms of its kind of, apparent dynamism, which obviously isn't as dynamic as that, but it is an economy where kind of consumer spending has led things. The problem that I see is just much more that there is and you've mentioned this, but it's not that there's going to be a second wave. It's that even when the lockdowns end, it's not like people are going to go back to work, or they're not going to really do it very much. And I think if you look at all the kind of studies, people aren't going to be getting on planes. People aren't going to be staying in hotels and all the other things that we've talked about in terms of, retail and everything. And so it seems to me that the crisis in confidence that whether they be consumers or employees has, that employees don't want to go back to work. I mean, that's what all the surveys show. So it seems to me that that's going to be the most difficult thing to overcome, because there's no confidence in of people wanting to get back to work at all. Well, not none. I mean, some people are desperate to get back to work if they've got no jobs. But for the people who are kind of sitting at home and working, there's no real impulse to get them out there. And I would have thought that the consumer kind of activity is quite important. The second thing I just wanted to ask is on things like the PPP loans, which obviously are grants if you fulfill the criteria, they all run out. As far as I can see, everything that they've done runs out sort of in the middle of June. And I mean, it's just hard to imagine what then happens. It's almost like that's also going to be another drop-off, because once your payroll isn't protected, then presumably you can just let people go. And so, by June, end of June, July, we're going to see another wave of unemployment. And is there any prospect that the government could just pump more money in? I guess it's the same thing about printing money, because that just seems to be, hopeless. So those are things in terms of the depth of the recession.
Okay, brilliant. Thank you very much. Right, so Joan. You're not unmuted, sorry. Joan.
Thanks very much, Jamie. That was really good introduction. Lots of food for thought there. Going beyond, I think, a lot of the commentary that we're seeing, by the economists and, big banks and so on. So I thought that was really good. Just a comment first about the relate to what Helen said as well about the depth of the recession, and your point about that these kind of growth rates that are being forecast, the kind of rebound for Q3 and Q4, you reckon that they're too optimistic, and they may well be, especially, I mean, my assumption is there will be second waves. It's inevitable once you open up, second wave, even third waves of this. Whether that means there has to be a lockdown is a political question, obviously. But I think even with those growth rates that are being forecast, in terms of levels, we're not going to get back, till 2022, 2023, to the level of Q4 in real GDP terms, not back to the level of Q4 2019. For a very long time, and that doesn't even take into account, obviously, growth that has been lost that will never be recovered during this period. So that is pretty dire, and I don't think people are fully taking account of that. And then added to that, your point about reasons to be actually even more pessimistic, I think, relates most of all, to the question of demand and consumer confidence, consumer spending, and so on. And so we're really, we're talking about a lot of jobs that are just going to go. The most stunning statistic that I have seen in relation to the US is that next month, less than half the population of working age in the US is going to be working. Now, in the US, you always had a relatively low labour force participation rate. And, it's interesting, compared to Europe, certainly very, very low. And there just seems to be, even before all this, an incredible number of what seems to be mainly middle-aged white men who've fallen out of the labour market. So I just wanted to ask you a little bit about that, and what are these people doing? But the point about all this again, which was the case pre-COVID-19, is the precariousness of the labour market in the US, compared with Europe and other places. And that's going to become much, much worse over the coming months. And I think, what we're seeing now is quite extraordinary, but it's going to become a lot worse over the coming period. So the implications of that really, for, first of all, for the economy, but also, for the political ramifications, I think are also quite serious as well.
Okay, great. So I'm going to take two more people, Chris Christou and Jacob Reynolds, and then I'm going to give James a chance to come back on all this, because there's already a lot on the table. So Chris Christou, what's your point?
Hi. Yeah, I suppose, well, the truth is, none of us really know what's going to happen once we get out this the other side. And it seems to me that a lot of countries are pulling up the drawbridge, and it's about also supply chains and the price of food going up at the supermarkets. And someone said that not going back to work. Yes, I mean, I work from home. That's also going to have a knock-on effect on the way we travel within this country, and that's going to, if we're traveling less, there's a demand for less travel and trains, there's going to be more people losing their jobs. We're also moving into this place where we're also clinging and holding on to the money we're not spending now, because we're saving for that rainy day that we are being told is going to come in a second or third wave. And it's just the levels of unknowing is a lot, and there's a lot we got to look at. And it's just, it's where do we start? That's my question. Thank you. There's a lot there. Sorry.
Yeah, that's no problem at all. Thank you. Right. I'll just take Jacob, and then I'll come back to James. So, sorry, I've just.
No, that's good.
Oh, sorry.
Oh.
I'm confusing.
No, and thanks, and thanks, James, and you've probably got enough on your plate already with these questions without me adding to it. But maybe to just synthesize or emphasize something that I think came out a little bit in Joan's contribution, which is that, I mean, trying to think about what the difference in the recovery between this will be like versus recovery from the GFC and the Great Recession. And I think the way that I see it, and the consequence I'll get into in a sec, is that, like, you had on paper, on lots of indications, a relatively strong post Great Recessionary period in the States, and certainly a lot of indicators were a lot better than in the UK, and part of that had to do with sort of Trump's like low tax policies, but part of it had to do with, I think, the fact that there was an increasing split in the American economy between people who were essentially forced out of work for a long time, and then the rest of the economy, especially the high-tech sector, becoming increasingly productive as a result of its sort of use smaller amounts of very well remunerated labor. And so there was a sort of appearance of a dynamism to the US economy that masked a huge amount of discontent underneath. And so my question really is, to be slightly old-fashioned, is what about labor militancy, or the unlaboring militancy already in the response to lockdown things? There's been a lot of talk of labor unrest, and there's been some notable examples of various kinds of union organizing, or people demanding that there was a GE plant, wasn't there, where they demanded that they be allowed to come in to make ventilators, whatever. But there's basically, my question is, if these things continue in this sort of differential US economy split between a very relatively high productivity or high value economy, and then that's quite dynamic internationally, and then the rest of it, is that just a trend that we can expect to continue? And what will, as Joan said, what will be the sort of political ramifications of that?
Okay, thanks very much, Jacob. All right, so I'm going to unmute James, and apologies to the people who are desperate to get in. Yes, James, what's your, come back on anything? I mean, there's way too much there to respond to.
Right. Yeah, great points and great questions, and I apologize in advance. I'm not able to get all of them. Let me start with Helen's, and you make a good point, Helen, and I probably went too quickly over this. I think the way I would see it is that I do think it's pretty clear there likely will be a second wave of some kind, but who knows, right? I mean, maybe there wouldn't be. You know, we just don't know, right? But I guess I would say that I wouldn't necessarily see a contingent of the troubles going forward on whether or not there's a second wave of some kind. I mean, right now, though, I mean, like you listen to Governor Cuomo in New York, I mean, he seems to be like, we're going to watch this really closely. It's almost like if we start to see the numbers going up in any way, we're going to tighten the valve again, as he says, right? You know, so it's almost like it doesn't even have to become a epidemic in any big way. It all of this, you know, so that's not good. But I would say though, my sense is that, and you know, I'm just like anybody, you know, just reading and what we can find out now. But my sense is that all the shoes haven't dropped, and that there's enough that's happening just in these last 8 weeks that are still going to, you know, in terms of unemployment and other impacts on the economy, which are still haven't played out. So I would say that that's already in and of itself is going to cause problems. And I think you're right about consumer confidence, and that matters, like you said, because you know, how dependent the economy has been on consumer spending. And I think generally our outlook should depend on how did we view the economy coming into this, right? Because and so right now, I mean, a lot of the comments were like, the economy is great, right? We had really low unemployment, lower earners, starting to see higher incomes. And, you know, and obviously Trump, you know, saying how great everything is. But, you know, if you looked at some of the underlying things, you know, there's, you know, biggest thing that, you know, Phil will tell us is, you know, low productivity. And that there's also other signs, like in addition to the consumer, you know, the reliance on some state spending, the growth of the financial sector. There's lots of signs that things are not entirely healthy coming into this. And that's what struck me when I read about what the Federal Reserve said in January, when they had their meeting in January before this. They said, there's a slight risk of coronavirus. Okay, that's fine. Nobody really knew exactly what that'd be. But they were basically glowing about how great the economy was, you know, fundamentally. And that seems to me to be mistaken. In terms of your specific point about the loans, yeah, most of the spending does run out in June. And the Democrats' proposal now is basically to just repeat everything to go to January. So there's really not much new thinking there. And it seems like the Republicans, you know, are just making a tactical decision to delay that. Maybe that will mean, because, you know, including to the point that someone made, I don't know if it was Sally or Dan, but I do think that they could easily come to an agreement, right? The Republicans are not fundamentally disagreeing. I think they're going to hold out for certain terms, and it's more around the timing. In terms of Para's questions around resilience, I think it can mean different things to different people, but I think one of the things you hear from companies is, you know, we should have been holding more cash. We shouldn't have been maybe, you know, had such, you know, cash buybacks or dividends shouldn't have been as high. We should hold more cash in the future. But it also, you see it in terms of PPE and drugs, you know, the thing everybody says, we're all dependent on China. We can't get anything. That shouldn't happen. We didn't have enough ventilators. Why didn't we have ventilators? So it can come out in this way, and it often is kind of leading to a more autarky, you know, where the U.S. would go it alone, and, you know, even maybe regionally go it alone on this. And I do think, Para, in terms of the structure, I think you're right to be confused. I think it does, when you have, you know, this unusual situation where you've got a federal government and the state governments, and basically like just totally dysfunctional between them. It should be possible to have overall coordination and still allow the states to have some ability to make different decisions. And especially in a big country like the US, one of the advantages you would have thought as an economy would be that you could have certain parts that are not affected going, full engines going, and other parts, slowing down if necessary, and then taking over from each other. But it really is a problem, the lack of coordination. And companies, my experience, companies spend a lot of time having to try to figure out what the situation is and the rules are. So basically, any issue today that I'm finding that companies are having to do, they have to do it 50 times to find out, if they're maybe not in 50 states, but a lot of companies are in, and they have to find out what are the rules in each state, and it's changing all the time, and it just really holds back any recovery there. The last point I'll just touch on it, that raised by Joan and Jacob, is around the some of the maybe political aspects of the working class. I do think that a general theme I think we found is that companies and individuals have been skating by more than they realize. They've been on thinner ice, and they've fallen through the cracks faster than we might have expected. And I think that's what this is highlighted. And that's, and I think in terms of the workforce, there's definitely been a lot of discussion around, poor folks who've been more affected by the virus in inner cities, the gig workers, who don't have a safety net, all that, which is absolutely true. But it is coming at the expense a little bit. And it's kind of the bias in the media away from middle America is to want to talk about what's happening to the workforce in industrial America. And it's like they're kind of schizophrenic. Like one minute they'll sort of say, we got to be sympathetic for the workforce, blah, blah, blah. But then the next minute it's like, wait a minute, they're wearing MAGA hats. They're big fat guys with guns going into the Michigan state government. Like, we got to stop these people. So it's, I do think it should find its expression somewhere. I would have thought it would be wrong though. Like some commentators on the right are saying, you're going to find protests against the shutdown and support for people like the Michigan guys with guns. I haven't seen that, Helen, or maybe someone, I don't know if you've seen it, but I don't really see too much of that. I think it's what I read as well in Britain, that there's a lot of support for there's a lot of fear, a lot of support for what's going on for different reasons. I think in terms of the workforce, unfortunately, I think most of the protests I've seen have been more around not going into work than around guaranteeing my workplace. I need a job, open this up. I'm willing to take a chance on this.
Great. Okay, that's brilliant. Now I'm going to give you the chance to have a bit of a rest because you got through a lot of stuff there. Very impressive. So I've got Kerry, Sheila, Daniel, Phil, and Evita in that order. So I'll start with Kerry. Far away.
Hi, everybody. Thank you, Jamie. That was really comprehensive, your introduction. And sorry to land you with more questions, so the rest might be short-lived. You referred to the stock market disconnect, and obviously that's what we see on the news every morning, are the stock market figures. And obviously there's always been a disconnect, but it just seems huge. And I just wondered if you could help me or tell us a bit more about that and how we can account for that. And more broadly, why the idea, I don't mean things taking the same form in terms of financial collapse or anything, but why the idea of depression has been so dismissed, given your figures in terms of it likely to reach 23% or the levels of unemployment in general. Why? There seems to be a weird optimism, which I don't really understand why there isn't. I'm not saying, we should all be catastrophists, but it does seem really a bit bizarre. And finally, I just wondered how much the economy is really going to screw Trump's chances now. I know we've talked about this in other meetings, but how much you think this is, given he was riding high on the economy, is how much are people really taking that on board?
Great, thank you very much, Kerry. Sheila.
Hello. So more questions, I guess. Thank you so much. It's really interesting. I'm struck tonight and the other night at the similarities between the US and the UK. So to just repeat what you said before I ask my main question, again, in the UK, I do feel that we're not yet impacted. It's only 2 months into the most amazing situation that's happened so very quickly. But the idea of extensive hardship, non-virus ill health in terms of our health services, lack of attention to other illnesses and diseases now is something that bothers me, and the absence of education. So those 3 areas have not impacted at all yet, in my mind. And we do have in the UK many people protected from the immediate concerns, and maybe rightly so. We've got 7 million people furloughed, and all of that goes with it. And then these trends of the unions demanding no work and demanding not to go back to work, but coming up with no solutions about the actual economy, seems similar. Somebody referenced the idea that food is going to be really expensive, but again, just at the current moment, food is incredibly cheap. There's an Irish beef mountain, isn't there? I got a ribeye steak for £2.50 at Asda. So what I'm really perplexed about is we need this huge bounce back. So those who spend their time thinking about what can we do, what's needed, where's the leadership, there is a huge bounce back that could happen. It is conceivable that could happen. So we know that there isn't the political will in the political structures we're looking at, but there must be something somewhere that is the political will that would be risk averse, even if we disagreed with them, even if they were reckless and wanted to spend and started telling people that they needed to all get back into work and take the risk. Kind of the political will around those ideas seem to be absent across the entire globe. So where's that political will actually gone? Where are the reckless people?
Okay, where are the reckless people indeed? One of the things that I noticed, to talk about food, just that there was been a really big debate in America, which I haven't seen in this country, about meat packing and how the meat packers wanted to close down, and Trump has kind of intervened to say, no, you can't have any of that nonsense. I don't know if Jamie wants to comment on that at the end or not. Right, we've got Daniel, then Phil, then Avita. So Daniel.
Okay, well, maybe to try and answer one question, although Jamie may have a different take on it than me, and to make one point. So in relation to the disconnect between the stock market and the real economy, although it does appear very strange on the surface, I don't think it's that strange when you look at it. I think you can see at least 2 reasons why the stock market might have bounced back. I mean, it did fall very dramatically and then it's come back up again. Partly because the Federal Reserve, the American Central Bank, has pumped so much money, even compared to the crisis in 2007-8. It has pumped such huge amounts of money into the economy that's helped to buoy up the stock market. But also, if you look at it, it's particular companies that have done well. It's mainly the big tech companies, the so-called FANG companies like Facebook, Amazon, Apple, Netflix, Google, that have done very well, and many other companies haven't done well. I'd also say that far too much attention is attached to the stock market. I mean, you can see why, particularly in America, you have all these small investors investing in stocks, but it's the bond markets, and Jamie in his talk referred to corporate debt, so bonds, that is much bigger and much more important to look at if you're really trying to understand what's happening in relation to the economy. My point is in relation to language, really, because I think that just as I think it's true, and others have made this point, that we need to develop a new language in relation to politics, I think you can make a parallel point in relation to economics. So I think resilience is going to be very, very big in this. So it's true, as I think Paris said, that the term resilience is used to mean lots of different things in different contexts, some positive, some negative. But it seems to me the way it's being used now mostly is that you have resilience on the one hand and efficiency on the other hand. And the idea, as Jamie alluded to, is that we put too much emphasis on efficiency. In other words, if China can produce certain commodities most efficiently, then let China do the whole thing. And not much on resilience. In other words, letting production be diversified across the world. So I think there's probably going to be a very big discussion on the importance of resilience. And that, as I think Jamie alluded to, will link to the whole trend towards autarky. In other words, less emphasis on international trade. I mean, that won't go away completely, but less emphasis on trade and more emphasis on countries and regions being self-sufficient. And finally, in relation to language, I think we should stop talking about stimulus, because normally what economic stimulus is taken to mean is that companies have got into trouble, there's a lack of demand, therefore, in order to pick up demand, you stimulate the economy by pumping money into the economy. I mean, there may be problems with that strategy, but that's the way it's normally understood. But these are not really stimulus packages, because the economy has very deliberately been put into deep freeze. It's very different from a normal kind of crisis. And what these really are, you could call them support packages, shoring up packages, rescue packages, but they're not really stimulus packages, because that doesn't really get to grips with the very peculiar kind of crisis that we're going through at the moment.
Yes, very much so. I mean, it is the difference between a treatment and a ventilator, really. It's keeping somebody alive and in a coma rather than actually trying to get them better. I did want to just throw in a question of my own, really, which is about, just to try and introduce some note of optimism, was about, Jamie mentioned the zombie companies and how many companies were just struggling by, and to what extent, and it would be in the long term, there would be any sort of, if you like, useful progressive clearing out of those companies, and whether that in the long run there might be some benefits to this downturn. And actually, as it happens, Phil Mullen's up next and he's written about this quite a lot, so but say whatever you wanted to say anyway, Phil.
Thanks. Yeah, I'll sidestep that question for a moment, but I wanted to say something about resilience, but in a different way than the way Daniel's discussed. I think Daniel's very right to make the point that most times when people talk about resilience today, I think it is linked to some of the questions about political will, because when people talk about the need for resilience, it's an expression of the sense of fear and vulnerability that people have, whether it's in geopolitics or in terms of people's capacity to live a life, or whether it's the economy. When people say we've got to bolster resilience, it's usually a sign we're in a pretty horrid state, or pretty torrid state rather, and it's a sign of their anxieties. But I wanted to use resilience in a sort of the old-fashioned way in answering Wendy, and the point about what are the limits to Fed's monetizing of debt, the MMT, modern monetary theory, the magic money tree and all that sort of stuff. And this is a very strong difference of America to, the rest of the discussions we've been having on other advanced economies and how they've been coping with or not coping with the pandemic, because there are very much fewer limits on the Fed and what it's been doing in terms of monetizing debt, which is effectively what it's doing at the moment. It's openly, as for a long time, been buying treasury bonds, which basically means that it is doing that proverbial printing of money in order to finance government spending. That's what it's been doing, and it's gone beyond that, as Jamie so well described, moving into buying corporate bonds and buying junk bonds and basically just pumping so much liquidity into the system. Now, the reason it can do that, and why there are a few limits on that, is because of the old dollar as world money. I mean, for 40 years, people have been predicting the demise of the dollar as world money, that it would, that it couldn't survive, that it wouldn't remain the dominant currency in exchange in currency reserves held by other countries, that its role as a world money would be challenged. First, it was being challenged by the yen, then it was going to be challenged by the euro, which didn't last very well. Then it was going to be challenged now in the last 4 or 5 years. People have been talking about being challenged by the Chinese yuan. And despite all this, it has stood, the dollar has stood rock solid as the dominant reserve currency. I think it's been in that sort of 30%, sorry, not 30, 70, 75% range, as long as I can remember. And that's because, in a way, of the network effects, or partly because of the network effects, that everyone still remains dominantly reliant on the dollar. Dollar still is traded, and that means that those fears a few years ago about the Chinese selling off all their treasury bonds was a bit inflated. These things could happen for arbitrary reasons, but generally Asia is very dependent on exchanging dollars, so that it's not in their interest, and they rely on dollar funds in their own assets, as does China. So this gives a tremendous, this acceptability of the dollar everywhere in the world, both gives the Fed a responsibility to try and make sure that things don't freeze up internationally, which is what it did on whatever it was, 13th of March, and piled in to say, we will provide swap lines to everyone in the world who needs them. So we're going to make sure the dollar does not freeze as an international currency, which was then in parallel with this huge amount of liquidity at home. So, you can look at the trillions and trillions of dollars that the Fed is spending, but really there isn't any limit to that, and therefore there's no real limit to the American government being able to print more bonds, because the Fed will just buy them. I mean, it does expose this mirage of the Fed being an independent bank. This is all the banks trying to be independent. I mean, the relations between the Treasury and the Fed over the last 6 weeks have been extremely close. Exposing that lie. So that's a sign of the resilience of America, which none of the other advanced mature economies have, and we should always bear that in mind when we move on to my second point, which is about the state of the Depression, which is more of a question, Rob, if I can, and how perceptions, Jamie, are might be changing. I have another way of looking at the prospects for America, which is not so much looking at what's coming down the line. To what extent would there be a second wave? To what extent would there be a second lockdown? To what extent would the messy relations between different states doing things at different times, and that whole, as you said, the whole arbitrary, confused character of the easing process, which obviously creates a lot of, as people have said, uncertainty. There's the question of the caution and consumers not buying things and all that. There is all that stuff, and it's all important to look at, but it's really secondary to what I think the pandemic has exposed, which is more that America was already in that very dire strait, as you said. And that, I think, Jamie, you're sympathetic to that perspective, but it does seem such at odds with everybody else's view that the American economy was doing well, as a couple of other people, Jacob and other people have alluded to. Much better than Europe was doing, which had its Eurozone crises, much better than Britain was doing, because everyone knew there was a lot of crap jobs being created, and the whole job creation thing was a bit of was a bit superficial. And, we had big discussions about inequality and gig economy and all that sort of stuff. But this idea that the American economy was doing well over the last 10 years wasn't just a figment of Trump's campaigning. It did seem to be well embraced, as you say. Even Powell was saying, it was a strong economy going into this. Now, to me, what the pandemic has done is exposed a lot of that could expose a lot of that as being untrue. I mean, we have, just to conclude, Rob, we have, as you said, not just 15 to 20% unemployment, but all the job creation of the last 12 years just went away in a poof in 4 weeks, right? So that, in fact, I think the levels of employment now in America are the same as they were at the end of the last century. So all that's just gone, which could be then interpreted as saying, well, it actually shows how superficial and artificial and flimsy a lot of that heralded and fated job creation was. So my question to conclude is to say, to what extent is there any change and shift you can even identify in the perception of things weren't so great when, as everyone led us to believe, which clearly has a bearing then on things like Perry's question about, what does it mean for Trump's re-election? But is there any beginnings of a flicker of questioning just that the economy was already in this very bad state, and all this pandemic done is just brought to the surface that very undynamic nature and the very flimsy nature of the last decade.
Right, very good. Thank you very much indeed. Right now, this has been a really, really good discussion, and look, people are making loads and loads of really good points. However, we're starting to run out of time, so I would really ask people to get to the point, as it were, and keep to the point, and make their points reasonably brief from now on. I'm sorry if that cramps your style. So, Avita, you're next.
Evening, and sorry everyone about the mismatch between the name and the image, but I've stolen my wife's iPad for this evening, so it's actually Zolf Janati, so good evening. My question, actually, Phil covered some of it already. I'll keep it very brief, but we talk about the US economy, internal economy, etc., but what about the big external factors and risks? And I was thinking there about, for example, the currencies that are pegged against the dollar, the big dollar holdings that sovereign funds have, Saudi Arabia, China, etc., and possible situations they could be forced into because of US both internal economic and political situations. So, for example, upcoming election, China being a potential not player, but a pawn in the US politics, etc., and China either reactively or proactively reacting to the situation within America, thereby leading to some of these bigger risks coming into play. For example, potential, large non-US players looking at their relationship with the dollar, making changes that then impact the dollar itself, and potential risks around there. Is that realistic, or is it a case of we're just so all tied into this sort of economic guaranteed mutual destruction that no one will even dare go there, and it will just carry on as it is? So that's my question, really.
Brilliant, thank you very much.
External risk factors. Thank you.
Right, okay, thank you. So, David Axe.
Jamie, great introduction. A couple of quick questions. So both the US and the UK are kind of relatively dependent upon services. And the thing that strikes me about services is that they can't be stockpiled to be sold at a later date in a kind of fire sale conditions. That income has gone, and it's gone for good. So is that a factor that we should be taking into account? In terms of another kind of similarity. Should we second question relates to, do we need to reappraise kind of Keynesian idea of effective demand, given that quite a few of the contributors have stated, and I think they're probably right to say, that there's a real reluctance to get back to work. So even when we are out of lockdown, it'll be a real struggle to get people back on the trains and back into the offices and get the economy moving again. And it seems to be kind of a demand or a lack of demand as a consequence of that. It might be a real factor, even though it's obviously a subjective decision on the part of the people, of employees.
Okay, brilliant. Thank you very much. Before I bring Jenny Cunningham and then James Woodhouse, I've been a bit remiss on the chat. So Vanessa has asked about discussion of different economic theories or models, and about the discussion on public infrastructure and public works to maintain economic activity. And also Mermaid Rachel has asked, brings us back to an earlier discussion in this series, and Phil Mullen said that the UK had been covertly in recession effectively for decades. Is that true of the US as well? How else to explain the extremely rapid collapse of so many companies? And Noah has asked about the effect of this on a trade deal between the US and the UK as well, which has obviously been a major factor in the sort of the Brexit discussion as well. So thank you for all those. Jenny Cunningham.
Hi, you can hear me. I think Phil probably went a long way towards answering this, but I did want to ask two small points. One about the servicing of American debt, you know, which previously was an international affair to some extent, and to what extent that is still the case, China and previously Japan. The other thing is, I wanted to ask a bit more about this word that's been thrown around, autarky, or, you know, old-fashioned protectionism. And it seems that Trump in particular has made, if nothing else, a rhetorical point about America first. But to what extent will the present COVID crisis and the economic crisis in America become an actuality in terms of protectionism, and what impact could that have on the world economy? Thanks.
Thank you very much. Right, I'm afraid I'm going to have to put this discussion on lockdown. So only the people who've got their hands up already, I'm afraid, are going to have a chance to speak. So sorry about that. So next up is James Woodhousen, I hope.
Thank you. Are you able, can I share a screen for a second, Rob?
I'm not sure if you can, but give it a go.
Okay. You've disabled it, but maybe you're...
let me just change something there. Right. Have another go now.
How's that look? No.
No.
Well, look, there's it's a small point on Joan. I think one of the key discussions here, and there's a bit of a parallel with Britain, is the labour force participation, the desire to want to go back to work and all of that. And I don't disagree with what Joan said about that. I just want to show, if I can, the BLS figures on it, labour statistics, because they are, you know, not as enormous as one might imagine. So, you know, the extent to which people were not going to work, and now they are a bit enormous in terms of declining. So I don't know if you can see, this is all a bit gonzo. Can you see that chart?
Yes, we can, yeah.
Yeah, well, that's the Bureau for Labour Statistics. It's true, no doubt, Joan is right, that participation rates, if you go back to 2000, at 67% of the total workforce, lower than Europe, and there is a decline very widely commented on. But in fact, if you look at the decline over 20 years until just now, it's from 67 to about 63. So that's 4%, maybe 5% over 20 years. Serious, but not catastrophic. Internationally, you know, quite unparalleled. Then you've got the big drop at the moment. So the question is really, you know, not to overdo it, as I think some commentators have, about just how much the participation rate has declined. We need to get that right if we're to understand the unwillingness to go back to work now. The only point I was going to make, Rob, very briefly again, is that I've just been mugging up on the New Deal, because I think we've all got a lot to learn. I certainly found I had a lot to learn about the New Deal. And the caricature is lots of FDR spending, sorted everything out, Tennessee Valley Authority, Works Progress Administration, all great, you know, what's not to like? In fact, the real story is very different. I can circulate an article in the Atlantic, very balanced on this, just how important sort of private sector and government, it wasn't state spending just like that. They used the private sector, especially in housing, in electrification of rural areas, and in defense, very importantly. So we need to brush up on this to contrast it with the last big outing for quote unquote state spending, to attack the Green New Deal, which I am surprised by. I think Jamie's right about this. AOC and other people not really going very big on the Green New Deal today. And again, if you can, just to conclude, if you can see this, some great stats. I don't know if you can see them, but you know, what did Roosevelt achieve? If you look at all the numbers, GNP, employment, construction output, you name it, you know, what he broadly did was get, by 1939, America back to the level of 1929. So, you know, what a great New Deal the last time around. And the Green New Deal put forward today in somewhere like Britain or in America, not nearly as ambitious as Roosevelt was, which didn't do that much.
Right, brilliant. That's interesting historical rejoinder there. Thanks very much, James. Dominic.
Hi, Jamie. I'd be interested in your thoughts on the relationship between the whole rhetoric of a US first kind of national-led responses to the crisis and the fact that obviously the US is still the world hegemon, and as Phil explained, the dollar is still very fundamental to the world's economy. So to what extent can the US pursue more national solutions, or to what extent is it still being ignored in an international direction? I think one illustration of this is travel. And I don't want to contradict Helen because she's made many great points. But someone showed me a picture today of a US aeroplane, full, every seat, people with masks on, actually complaining about lack of social distancing. You know, obviously travel is very fundamental to the US economy, not just for tourism, but for international business as well. Is there a possibility that there will be some kind of national opening up of travel to the world, or will there be different state solutions? I noticed today it was interesting that the EU said that individual member states could pursue their own national solutions to travel, and Germany announced that it would be opening all its borders with some restrictions from Saturday. So I'm just wondering, in the US context, to what extent there is potential for national solutions still being pulled in an international direction, or are there even maybe different state responses on this?
Great. Okay. Thanks very much, Dominic. Dennis, you're up.
Oh, hello, and hello, Jamie. Great introduction. I thought Warren Buffett used an interesting metaphor, showing some recognition of what might happen in America when he said that when the tide goes out, we'll see who's swimming naked. But on a slightly different issue, it seems to me that, you know, Trump has a kind of three-pronged strategy, if you like, for dealing with it. All the things that Jamie have outlined in relation to business and banking and so forth, and liquidity problems, and, you know, paying workers, I think $600 until July is what he's doing. That's his first strategy, combined with pushing the states to open up as quickly as possible to get the economy working again, and which has caused lots of friction. But that seems to be a second element of his strategy. And the third element, which is something we haven't really commented on at all, well, we have, because you know, there's the issue of blaming China, which I think is quite interesting. I just noticed as a kind of side issue, there was the release of a dossier of intelligence information in Australia to the Australian press called Five Eyes, which is intelligence information from Britain and US and Australia and Canada and New Zealand. All the intelligence agencies from those countries backing up Trump, saying there is kind of significant evidence, although not published, irrefutable evidence, some of them are saying, that China was behind, you know, the laboratories in Wuhan or whatever were behind the release of the virus. I'm just wondering to what extent, you know, that third kind of point has any significance to, you know, America's kind of capacity to sort of, you know, to use that as an issue, which might have bigger ramifications as well. I mean, I don't know how long China will sort of stand by and be sort of heavily insulted by all of this. I saw another article where Chinese embassies around the world have told their people to go out in really hard against the American kind of approach. And I'm just wondering, that subjective element, does it have any meaning in all of this?
Okay, thanks very much, Dennis. Right, last but not least, it's Johnny Morris, and then I'll bring James back in to attempt to sum up all of those different things. So, Johnny.
Hello there, I hope you can all hear me. I'll be brief. Do we think that the sort of Trumpite approach to opening up the economy, finishing the lockdowns, is economically the correct one? This is a virus that kills the old and the unfit, which are the non-active, you know, not economically active people. So we'll leave behind your workforce, which, so why, from an economic point of view, wouldn't it be better to go for a V-shaped depression, open it up, kill off all the economically inactive and let all the active people get back to work.
That point was as dark as your image there, Johnny. Thank you.
Listen, mate, I can't work out how to turn the camera on. I'm a technologist as well. It's embarrassing.
Right, thank you, Johnny. Right. The floor is yours now, Jamie. I wouldn't even attempt to tackle all the different points. Maybe pick 2 or 3 out to tackle. So over to you, Jamie.
Yeah, so right, there are a lot. It's hard to know where to begin, but what I would say is I obviously agree with Phil on the discussion around the dollar and the how some of the limits that might exist for other countries don't necessarily apply, at least in the medium term, and I think that's true. I don't think, and I don't think Phil was saying this either, but I don't think that it necessarily then means that whatever the Fed's doing now is either going to be effective or it couldn't even have adverse effects. One of the things, it relates to the point about the stock market that a couple folks mentioned, and agree with Daniel. I think, to Kerry's point in the beginning, a lot of the times what you hear in the news or you read is like the market's up and it's like in reaction to something that happened yesterday. And, it's in the US recently, it's all been around, oh, well, there's confidence there's going to be a recovery and it's a forward-looking indicator. Or they'll say the Fed, as Daniel mentioned, the Fed's backed everything up. They don't see any problems there. I think what's missed often is the sort of over time look, and in particular, what tends to happen, to really simplify it, is when there aren't other productive ways to invest, you tend to see the stock market go up relative to the economy generally. It tends to move in line with the economy, but that kind of froth to it tends to be, indicative. And I think that's what which we are starting to see. And I think one of the things that when the Fed, in particular, there's a mechanism by which the Fed has been buying up bonds. And, one factor, it's not the only factor, but one factor, technical factor, is that today a lot of the market is based on these broad-based, what's called mutual funds in the US. I forget what the UK term is, the equivalent. But basically, these are meant to be balanced portfolios. So companies, what happens is when the bonds, there's more investment in bonds, you need to invest in stocks, in equity, to balance those off. So there's another like unintended consequence of the Fed is to push the stock market up, which then holds out the possibility of a crash at some point. Not predicting one or something, but just that's possible. Especially if you look at the way in which, like leading up to 2007, 2008, and some others, where the investment in stocks is coming through debt when you're borrowing to buy stocks. That actually is much more vulnerable to a crash. In terms of the question to Phil's question around are we seeing any changed perceptions? Great question, because that's something you'd want to identify and see. First of all, I would say that probably it's the case that this thoroughly ingrained, rosy outlook prior to this is one of the reasons why people were holding so long to like a V-shaped recovery scenario, because they just couldn't imagine that this latest recession could have the impact it could have. And it's just starting to come through. I think the only place that I've not seen a whole, a more thorough questioning of this, but where I have seen it is there are more commentators now that are talking about things like, we've got to let bankruptcies flow through. We've got to let this happen. And they're saying there are companies that have existed that really didn't deserve to exist, that they've been just getting by. And this is a good enough occasion for this should happen. There should be consolidation. And that's the closest I've seen it, is that kind of recognition that, oh yeah, we've got a bunch of companies out there that, aren't all that healthy. I think in terms of the economy, I think, and how through to politics, and the more popular perceptions, I mean, everything did seem to indicate before this that people generally did think the economy was doing well, and that was helping Trump's prospects. I do think if there's any questioning now, it's more likely it's coming from people, your ordinary people today. And they were, basically saying like, my life's been upended. Like I had certain plans for whether it's my business or my job, and I don't know what I'm going to do now. Like I just noticed today, huge drop in applications for college, financial aid. Basically, all these people's life plans have been put on hold. They thought they'd send their kids to university, and they're not going now. So I think that will eventually, filter through. Last couple points. One is Great Depression. Absolutely right, James. We should look at it. In my view, on the whole, the New Deal was more political. It gave a sense of activity, and it definitely secured things. It didn't have as much of an impact economically, but there was something of a recovery by the mid-30s, and then by the mid to late 30s, there was another big drop. And we knew not till the Second World War were they able to sort things out. But definitely, let's compare and contrast. The nationalism issue, I think definitely that's on the cards, Dominic. That's all the discussion is around that. I would say also there is, I think you were referring to states as in this, the separate 50 states, there's definitely been a discussion around that as well within states, and it's kind of weird to see this coordination of these former colonies in the Northeast deciding to sort of team up together, and sort of they're talking about having, that continuing. It's very, autarky we normally think of internationally, it's happening within the US too, which is kind of unusual. I do think though that there are limits to that. Not only is it economically, inefficient and problematic and can't happen, but also if you think about what, actually I think it was James and Austin were talking about the last, highlighting that the US as a percentage of the internet, its international exposure. So it already is very much a domestic oriented economy. So the idea of withdrawing somewhat from the international economy, I think is not going to solve its problems in a big fundamental way. I do think, Dennis, that you were asking about China. Again, we don't really have time or the place to discuss this. All I would say is that I do think that there's quite a lot of consensus in the country. First, among the political elite, they both like to blame China, and then secondly, there's I think popular view is not they don't hate Chinese, but there is a view that we're too dependent on the Chinese economy. So there is some resonance it resonates somewhat when the politicians start going on about China, and so I think that is an area to watch. But that's a very big, dangerous game, and it goes back to the point, Phil, and I think, was it Zolfi? I'm not sure if I caught your name correctly, but good points. I do think that it is a political issue. I think that's no one in the short term is going to want to touch that issue. And the last point I'd say, Warren Buffett, one of his famous phrases is "Don't bet against America." So as pessimistic as I've been today, I don't want to come across as if there's no chances for restructuring, that there's no chance, that there are definitely dynamic sectors. I think I've only emphasized the dark side because there's just there's so few people that are acknowledging that so far.
Okay, I'm going to unmute everybody. I want everybody to give James a really big round of applause.
Hey. Well done, mate. Thank you.
Well done, Jamie.
Right, I'm sorry to mute everybody again, but I'm just going to make one or two quick announcements. So yes, thank you very much, Jamie. That's the end of this sort of this big blast of economy forums that we've done on looking at different sections of the world economy. We have a small break now, and then we'll be back sort of on the 1st of June. We're going to be talking about geopolitics. It's actually an Academy of Ideas discussion in association with the Economy Forum about geopolitics and where that's going. And that'll be on Monday, the 1st of June. And the next sort of regular Economy Forum is on the 10th of June. And we'll switch to looking at different sectors rather than geographical sectors. And we're going to be looking at the oil industry because we've seen some astonishing drops in oil prices over the past few weeks. So looking at what's been going on there as well. If you can't get enough of me chairing, then next Thursday, one of the big discussions of the pandemic is about the role of experts. So we're having a discussion on democracy versus technocracy. I have just pasted into the chat, although there's been lots of great comments that have covered it up. Now I'll do it again, in fact, haha, which is the link to the donate page. I would love to buy Jamie a pint. I can't. So if you would like to buy the Academy of Ideas a pint, please do. And that's everything for now. So please, if you want to hang around and chat for a bit, I'll leave the meeting open for a little while. But thanks again to James, and what a fantastic discussion it's been. Good night.